A lot of people are setting up self-managed super funds to purchase crypto that they may not be able to do with the industry and retail super fund. And whilst a lot of clients do really, really well in the crypto space, unfortunately, it's one of those areas where there seems to be a lot of people getting scammed. Most of our clients that are looking to they're looking to continue their portfolio, so they might have one or two properties in their personal name. They can't borrow any more in their personal name, but they really want to continue building their property portfolio. And the perfect way to do that is to continue that inside superannuation. Obviously, there's some differences. One of the main differences with owning property inside superannuation is how the property is treated from a tax point of view. Obviously, when you're investing in property in your personal name, you get those tax deductions in your personal name. Everyone's sort of heard of negative gearing and how that works. When you invest in property inside super, negative gearing doesn't really apply because the tax rate is already very low. It's only 15%. If they were to sell the property after owning it for more than 12 months, they'll only pay 10% capital gains tax, which is ridiculously low. But the magic happens at retirement. Once the clients hit retirement age, which for the majority of them is preservation age, around about 60, and then any time after that they decide to retire, and you don't have to retire at 60. Most people don't have the ability to retire at 60. So whenever they decide to retire after that, when they put the fund into pension phase, the tax rate goes down to zero. You won't pay a cent of capital gains tax if they were to sell the property, and if their strategy was to pay the property off and live off the rental income forever and a day until they drop off the perch, they won't pay any tax on that either. So it's a really generous tax environment to own assets like residential property. So it's not just about owning property. There's some pretty cool tax advantages to doing it inside super as well.
Yeah, that's a really powerful one when you're talking about the tax advantages being zero. There's no other, apart from having a company established in the Cayman Islands, there's no other real tax benefits apart from, the biggest one is obviously, as you said, paying zero taxes.
Well, you can't really beat that, can you?
You can't beat it. Yeah, that's pretty cool. What about some sort of horror stories? Have you had any sort of horror stories over the years that you can sort of tell me about, that clients perhaps that might not be following doing things they shouldn't do with their fund, and how do you deal with that? What do you do? Do you contact the client? How do you fix that problem and educate them? And what do you do in that sort of scenario? And
I suppose you might call it a temptation when you have an SMSF. Mentioned it a little bit earlier that there is a bank account that's attached to the SMSF, and for all intents and purposes, it is a bank account. You don't get a bank card to go and sort of tap or anything like that, but it is a bank account because owning property inside super, you still pay all the same expenses. There's still rates to pay. There's still, those type of property expenses to pay, and they must be paid out of that bank account. But I suppose for some clients, there is a temptation to use that bank account for things that they shouldn't be using it for. And obviously, if you've got an SMSF, you can only use your SMSF funds for one reason only, and that is for the betterment of your retirement. But for some clients, there is a temptation, and we have had clients in the past that have used the funds that are sitting in their CMA to go on holidays. That has happened. Wow. And that's I think that's about as bad a thing that you could possibly do
to go with on your holiday.
SMC, to go on holiday. Yep. So that's pretty bad. If that happens, so we've with our tax team, we've got someone that has a look at all of the transactions that have happened with all of our funds, which is incredible. And if there are any sort of dodgy looking transactions, legal withdrawals, they'll be flagged. And if it's one of the clients that's come through my channel, then I'll give the client a call, ask them what they've done. Usually, obviously, if the client's gone on holidays, they know they've done the wrong thing. But there have been occasions where the client has So I'll give you an example. So a client might do some banking. They might have a Macquarie cash management account, and they might do their personal banking with Macquarie as well. And purely by accident, they may have used the Macquarie cash management account to pay a personal bill, and it was just a pure accident. So that happens as well. Usually, if the client fixes it immediately, then we'll just sort of write the relevant minutes, and then it's fixed pretty quickly. But if the client sort of spent a lot of money and they've gone on holidays and they don't have the ability to pay it back, then they're going to be in pretty big trouble with the ATO.
Just on that, I know when clients do, if a client does withdraw money before meeting a condition of release, that money is then added to their personal income. So if they withdraw 100 grand, that then adds onto their personal income, and then they're taxed at up to 45 cents in the dollar. So not only do they have to return the 100, they're then up for 45 grand in tax on top of that. Pretty big no-no, but with I guess is there anything else? Any other sort of stories that stand out? That's a pretty bad
just
one.
On that before I move on, a lot of the clients, they don't realise that as part of owning an SMSF, an external audit gets done on their super fund every year, so they can't hide anything. There is an external auditor that essentially reports back to the ATO of that type of conduct. So that type of thing can't be hidden. And there's also a tax return that gets done on their SMSF as well. So we go through all their transactions in detail as well. So it's never going to be hidden. It's always going to come out. Other horror stories. I'd say that the majority of them are to do with that type of thing, but there is crypto is another one of those assets. Obviously, crypto is a little bit more of a recent phenomenon, but everyone wants to get into the crypto space, and a lot of people are setting up self-managed super funds to purchase crypto that they may not be able to do with the industry and retail super fund. And whilst a lot of clients do really, really well in the crypto space, unfortunately, it's one of those areas where there seems to be a lot of people getting scammed. So there have been a few clients that have given their money to, dodgy crypto scammers, and they've lost it, and they'll never get it back. So that's sort of created a few issues for people that want to invest in cryptocurrency with their superannuation. A lot of the banks have sort of cracked down on that sort of thing, and some of them won't even allow transactions to crypto exchanges.
Hey guys, just a quick disclaimer and just a reminder that this is not personal advice. So make sure you speak with a licensed advisor before making any investment decision. Thanks for tuning in to this episode of SMSF Insider. If you got value from this, make sure you subscribe so you never miss the strategies we share to help you take control of your financial future. Find us on socials at Blue Chip SMSF or book a call with our team to see if we can help you.